Many business owners believe that paying workers in cash saves payroll taxes. After all, there's no payroll software involved, no withholding calculations, no paperwork at all. Cash payroll does not eliminate federal and California payroll tax obligations. In fact, it often creates new ones. And when workers are kept off the books, the IRS and California EDD and many other states, they're going to view the situation as far more than a simple civil payroll tax compliance issue. It's also potentially a criminal issue. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA, and I'm the sole owner of the tax law offices of David W. Klasing. To date, 24 offices in 11 states to serve you nationwide and internationally. Today, I'm going to explain why cash payroll creates civil and criminal payroll audit risk, how the IRS, the EDD, and many state agencies identify off-the-book workers, and when payroll shortcuts can evolve into criminal tax exposure. Well, let me start by saying paying your employees in cash is not automatically illegal. The issue is what happens next. Employers generally remain responsible for income tax withholding, Social Security taxes, Medicare taxes, and making payroll tax deposits, engaging in wage reporting, and associated employment tax filings. The form of payment does not eliminate those legal obligations. So, how do auditors go about finding off-the-book workers? Well, what I've seen in my 30 years is cash payroll cases rarely begin with a confession, hey, I'm guilty. Auditors come in and they start comparing things like payroll returns. They look at Forms W-2, Forms 1099. They especially look at cash withdrawals from your bank. They're going to look at time cards, work schedules, point-of-sale records, general ledgers, and income tax returns. When profits generated by labor do not match reported payroll, the questioning begins. Many businesses attempt to classify workers as independent contractors. In California, they've really tried to legislate that off, but labels do not control. The actual working relationship between you and your workers control. If your workers use company tools, work under company direction, or perform the company's core services, whatever you're selling, or they lack an independent business themselves, both the EDD and the IRS in most states are going to reclassify them as employees. This can come in and create multiple years of back payroll tax liability and other problems. So how do payroll issues expand into other tax problems? Cash payroll often connects to broader tax issues. The business may deduct labor expenses without issuing W-2s or 1099s. The business may pay workers from cash sales. The business may pay workers from cash sales and then underreport that revenue. As a result, a payroll audit can expand into income tax inquiries, sales tax inquiries, or straight into a criminal tax investigation, federal or state, including exposure for aiding and abetting the income tax evasion of your workers. No 1099, no W-2, they're not going to report it and they're going to hold you responsible. Personal liability risks are going to follow. Business owners are often surprised to learn that payroll tax problems can become theirs personally, outside of the entity. The IRS may pursue the trust fund recovery penalty against responsible individuals. This may include owners, officers, controllers, employees, payroll managers, and others. Bottom line, anybody with authority over payroll decisions. Merely having the discretion to pay the company's creditors rather than remitting payroll taxes is all it takes to be on the hook for those payroll taxes yourself, in whatever role you held. The liability, whatever you get out of this, does not necessarily end with the business involved, or the owners of that business. When do these cases become criminal? Admittedly, most payroll cases begin as straight civil matters, but criminal tax risk increases dramatically if the investigators find things like 2 sets of payroll records, employees paid in cash envelopes, false Forms 941, a pattern of missing W-2s and 1099s, coupled with cash payroll, false invoices, flat-out worker concealment, or deliberate attempts to avoid payroll reporting. At that point, the government may consider criminal employment statutes. Federally, look at Section 7202. Also, illegal aliens complicate this matter even worse. So in closing, if your business paid workers in cash, kept employees off the books, misclassified workers, or failed to report payroll correctly, This is the stage to act carefully. At the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs help businesses reconstruct payroll records, analyze worker classification issues, evaluate trust fund exposure, and respond strategically to IRS and EDD inquiries, all the while minimizing civil and criminal tax exposure. The earlier you get us involved, the better. Call 1-800-681-1295 or visit Klasing-associates.com to schedule a confidential reduced rate initial consultation today. You won't regret it. Dave Klasing, Tax Attorney, CPA.